Testing, testing. Welcome, folks. Welcome to Thursday Night Stock Charts Live. What we're going to be talking about tonight is a lot of the same as what we've been talking about, a lot of it geopolitical. And I want to begin with addressing a question that my father posed to me. He watches the replays at time. And his question to me was, while he enjoys the macro view, he questioned why I was doing that and why wasn't I doing more stock picks. And I'm open to change and suggestions for how to change the format or how to improve the format. But the reason why I go over a lot of this stuff is the same thing over and over again is to educate that the macro view is the only view that you need to take a look at when you're trading this market. If you're not aware of what the macro view is, what forces are lining up against you, you can look at a 1 minute chart, a 5 minute chart, a daily chart, all you want. But you need to take a look at the events that are unfolding that could drive oil prices, that could drive the US dollar, that could drive interest rates. All of those have a direct impact on equities or whatever you're trading. So this is why I begin, and a lot of times, and I'll admit fault here, that I don't go over the whys behind why I'm going over these charts. Even when I'm bashing politicians, I bash them because they're corrupt and they're causing our interest payments on our debt to go through the roof, and the equity market simply can't handle these yields that historically are pretty reasonable. By any standard going back in history, we almost hit a 5-handle today on the 10-year yield. You go back, and we're going to do that tonight. You go back during past history, 5-year yield was normal. That was low. Not obscenely high as it's being treated today. And we're going to go over the whys it's being perceived as obscenely high right now. And we have a lot of other things to get to, but of course we want to go to you. Say hello to folks. And we're going to talk about where this market goes next from here, because today was not a lovely day. Jody, first in line with her comments. Very proud, very proud. Franklin, hey, brother. Mr. Pete, welcome. Jeff, good evening, Bob. I keep wondering when the Fed starts buying treasuries to lower the 10-year yield to save the banks. Yes, they will be doing that. Yes. As a matter of fact, I think it was Morgan Stanley that came out with a note today. I could be wrong on who wrote the note, but that Treasury, the yield hit almost a 5-handle today. We're 1 basis point away from a 5-handle on the 10-year. You have a lot of resistance above that mark. So their comment is that this looks like a good point to buy Treasuries. I'm on board with that, but a couple of things are bothering me. One of which is the possible breakdown of the US dollar on a weekly time frame and bond prices. Bonds and the dollar break down at the same time. That's not good. That is a vote of confidence on the United States, and that would be a no vote to investment in the United States. So we don't want to see that. Although the weaker US dollar will be good for corporate America, but it's not going to be good for inflation. It's going to drive inflation up higher. So the strong US dollar helps buying power. This is a water, Aquapane. I had this in Tuscany when I was over there, and awesome water. If you ever get a chance, Aquapane, delicious water. Very refreshing. All right, let's get to it. So we had Jay Powell out today, and we can cut through all the BS here. Was he dovish? Was he neutral? Was he hawkish? Who cares? This is we cut right through the BS. All we need to do is go to the Fed Watch tool, and we take a look at the probability of a Federal Reserve rate hike in November. Has it changed? Has it gotten worse? It's about the same as yesterday. No rate hike for November. Then you take a look at December. Yesterday, this had dropped down to 60.8 from a high last week of 60.5. Now we moved up 76.4. No rate hike in December. So whatever his comments were, I have no idea what they were, and I really don't care. I look at this. This is the market that tells me how they perceive Jay Powell's comments, and in reality, they're perceiving the economic outlook, and they are pricing in what the Federal Reserve must do to keep this market from falling apart. And if he disappoints the market, like hypothetically in November, nobody's expecting a rate hike. That's my trading software. How do I mute this? I got to figure out how to mute that. So if he raises rates, this market falls apart. So he's not going to disappoint the markets. This is the market telling Jay Powell what you're going to do. And no rate hike. No rate hike. Roll. Sorry. Okay. So this is a summary that I responded to of Jay Powell's comments. Additional evidence of strong economy may merit rate hikes more. Return to 2% inflation will require below trend growth. I'm going to interpret what that means in a moment. Committed to sufficiently restrictive policy, may still be meaningful tightening in the pipeline. Summer inflation data was promising. September, less encouraging. The Fed is committed to 2%, blah, 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 blah. Okay. Let's boil it down. My reply was this. Let's sum up his comments. Jay Powell, our honorable Fed chair, will not be happy until GDP goes negative and jobless claims skyrocket. Rather than telling Congress to stop spending, he takes the path of least resistance, which is to kill the middle class. Congress doesn't bother him about killing the middle class. That's fine. They don't care about that. No problem whatsoever with destroying the middle class. What they do have a problem with is telling them to stop spending. The 5 holdouts that are not voting for Jim Jordan as the Speaker of the House, they all hold positions of appropriations chairman. Basically, they get to spend all they want. And if they vote in Jim Jordan, they're worried that those days come to an end. And they probably will, to a certain extent. So that's why you can't get a new Speaker of the House in, because these so-called Republican conservatives, which they're Democrats, they want to be able to spend at will without any accountability. They want to spend our money, not their money, our money. So on whatever, a bridge to nowhere, it doesn't matter. That's their power. They don't want to let that go. Dehydrated today. Good day in the market today. Federal debt. And this is what I'm alluding to. Tell Congress to stop spending. Then you don't have to kill the consumer. Federal debt, total public debt. What are we at? 53 trillion, nearing 53 trillion. I don't even know what this means from Michael Burry. It's time memesters look up at what the death spiral could. I don't know what that means. All right. So moving on to capital investment. This is companies investing in their businesses, investing in new equipment, getting ready for the next business cycle. They're not. They're tightening it up. So business spending is nearing recessionary levels. U.S. fixed investment in information processing equipment and software relative to its 10-year trend. We are in a major downtrend. All we need to do after this dead cat bounce from 2002 is break now to new lower lows. And we are in this is a death spiral. This is very, very bad. This is the Federal Reserve's balance sheet. Hey, Sean. Welcome, brother. The Federal Reserve's balance sheet. They really dropped it hard last week, and this is the Federal Reserve continuing its stealth tightening of their balance sheet. This drives up interest rates. Why? It's because they're selling treasuries into the market. They're not buying treasuries, they're selling them. What does that do? Well, let's take a look. Here's the 10-year yield as of today. This is a quarterly chart. Today, we hit highs not seen since 2007. Think about that. 16 years. 16 years. All of this free money is over. The trend is gone. It's in the rearview mirror. There you have it. The downtrend channel is done. We are now in a new, and to be fair, a parabolic move up higher here towards normalization of the 10-year yield. Now, the problem is for the equity market, and the reason why you hear all the doom and gloomers on CNBC come on is that, you take a look at back here from 1967 to 1982, and yields were high. I mean, they went all the way up to 15.84 on the 10-year. And guess what? Stocks overlaid here in blue, the S&P 500, they moved up higher. They moved up higher. What's different this time? What's changed that all of a sudden this relatively normalized yield on the 10-year is all of a sudden a problem? It's simple. It's this. The debt. The interest payments we need to make on that debt is through it's insanity. It's equal to the defense budget, and they're not willing to cut either. In fact, they want to increase the defense budget because now they want 2 wars, maybe even 3 if we're lucky. So, and they're definitely not going to cut spending. That's their power. They're drunk on the power of free money. That printing press, they don't have to go to their constituents and say, we're going to tax you more. We're going to raise taxes. Oh, no, no, no. They know they're going to lose their job. So what they're going to do is they're going to try to inflate the debt away. Now, they could do that if they stop spending and allow GDP to grow, and we grow out of our debt like we did after World War II. But they're not going to do that. It requires them to cut spending, and they're not going to do it. They are doubling down on dumb. So I'll pause here and I'll say the reason why we go over these macro views is that all of this, as benign and random as it is, all of it comes into play when it comes down to the equity markets and where they go from here. Their ability to move up higher is hindered by the actions of the Federal Reserve and Congress and the nitwit in the White House. So speaking of our venerable President of the United States, His Honor, Joseph Biden, he will be addressing the nation. I can't wait for this. Tonight at 8 p.m. Eastern Standard Time to talk about, it's a primetime office. I can't wait to hear what this is going to be. Address on Israel and Ukraine. Israel has been fighting their own battles since 1947. All of a sudden, we need to land there and put thousands of troops on the ground. Now, with all of the events that are unfolding over in the Middle East, oil prices are moving up higher. And again, this is a macro view. Oil prices always lead to recession once they start skyrocketing up higher. And eventually, once the recession hits, oil demand drops. It's demand destruction. Oil comes back down to earth. The economy recovers. Rinse, wash, repeat. We see it constantly. So now oil is beginning to set up for a new higher high. This is very bullish. Now, why am I so bullish? Can't they tap the strategic petroleum reserves? No, we don't have any more left. We have about 17 days left. So that's not an option. What about the rig count? U.S. total operating rigs are in a decline. And Biden banned drilling on federal lands. And oil surges after report U.S. destroyer shoots down multiple Houthi missiles. So they're looking for another war here. What is this? Get out of here. And unfortunately, I initially I thought that they weren't going to go down this road. Apparently, they are going to go down this road. And buckle up, folks. It's just more spending. And Lord knows what kind of catastrophe they're going to get us into now. These people are not adults. They are, at best, the most kindest thing I could say about them is that they're ignorant and arrogant. That's the nicest thing I could possibly say. At worst, they're nefarious, and this is all self-inflicted intentionally. Whatever we do here, whether it be our spending and failure to have a budget. We haven't had a budget since Obama. So we don't have a budget. We have no desire either on the Republican side or the Democratic side to cut spending. Our inflation is cloaked by government smoke and mirrors. It's actually much higher than what it is. Jobless claims are a joke. Excuse me, not jobless claims. Non-farm payrolls are a joke with what they're releasing. They're a lot worse than what was expected when you adjust for the household survey, which prior to Biden was exact replica of the establishment survey, which is what we're fed once a month, Friday jobs data, non-farm payrolls. There are two reports, establishment survey, household survey. Usually they go lockstep and accurate. Ever since Biden got into office, jobs, according to the establishment survey, like this, screw through the roof. Household survey, the exact opposite. We're losing jobs. U.S. Embassy tells Americans leave Lebanon, get out while you can, as 2 Hezbollah rockets land in Israel. So first it was the, what do you call them, Hamas. Now it's Hezbollah. So it is growing. And when you take a look at the U.S. personnel that are deployed overseas, you know, the Cold War has been over for 20 years. And somebody really needs to explain to me why we have 60,000 or so troops still in Europe. And this all costs us $100 billion per year to maintain. The Europeans pay hardly anything. We support NATO. We support their defense. And what do we get for it? Ukrainian lawmakers vote to ban the country's largest Orthodox church body. They're banning the churches in Ukraine. We sent over $100 billion to them. They banned the opposition party, and they're closing churches. What's that all about? Now, talking about the Schiller PE ratio, it's pretty much unchanged from where we began the week. A little bit lower because the stocks are lower. The key is here to remember is that when you're taking a look at the S&P 500 nominal EPS on a trailing 12-month basis, we're at the upper band of EPS range. And now you should expect that we're going to roll over here and retrace back down to this lower band of support. This is a trend, or this is a chart that goes back to 1954. So it's very, very reliable. So we need to expect a drawdown in EPS guidance going into 2024. May not be Q1 2024, maybe Q2, but expect a drawdown in expectations for earnings. That means that you're going to have multiple compression, not expansion, and that is going to be very, very difficult for stocks, and you've already begun to see it. Case in point, Tesla reported they missed. And initially, their stock was pushed up higher in the after hours session. Now, Elon Musk came out, and the reason why it spiked up after hours is that they validated that the Cybertruck is going to be coming out in November, and that's a good story to tell. The however is during the conference call, Elon Musk spoke about production issues with the Cybertruck and that they may not be able to meet demand. Problem, big problem. And that's one of the proximate reasons why you saw it get sold off hard last night and why it's probably going to remain under pressure for the time being. Now, I plan on selling puts here. That'll be a bullish bet on Tesla, but I don't want to put it on yet. I think we can go lower here. I'd like to see a break of the lows back here in August of 23 and a close down below 12.36. And then we'll look to sell some premium down there. So on any rally, I'll sell calls and create a strangle on that trade and just generate some cash flow on Tesla. And I was short of Tesla. I covered that short in advance of earnings. Now we're going to look to possibly reestablish that as we rally up and into, say, the 20-period moving average or one of these resistance levels. You can't press a short here right now. It's gotten beat up too quickly. So I would not press a short. I would wait for a rally and then reestablish a short position on that counter trend move. Now, let's see how we closed out the day. Let's go with a 15-minute view because I believe they popped right before the close, and they did. So we may get some short covering here. If they rally it up and into the 20, what moving average is this? The 50-period moving average. I would look to be a shorter at that price point of Tesla shares or sell calls up at that price point. My friend is Ukrainian Orthodox. They traditionally relate to Russians in culture more than modern Ukrainian churches. Probably, but you know, leave the churches alone. I mean, this moron, this femboy, what's his name, Justin Trudeau, up in Canada. He's got a face you just want to smack. You have an immigrant from Poland, a pastor, and the guy knew what it was like to live under Soviet rule. And during COVID, they kept coming into his church, and he kept chasing them out, calling them Gestapo. They arrested this guy multiple times. For all I know, he's still rotting in jail up there. So it's not just the Ukrainian thing. This is a leftist tactic, and they don't want anybody praising anything other than big government. They want that. They don't want any other voices contradicting the government. So that's why they're doing this. Yeah, Trudeau arrested him on a bunch of times, but I think that I think he's still in jail. And correct me if I'm wrong. Hopefully he's not. That's funny you brought that up, Michael. I was looking at that the other day. That's so funny. As a matter of fact, I have a watch list here. and I added it to it the other day. This is the Guggenheim Strategic Opportunities Fund, and it rallied today. I need to do more research on it. I've been doing a lot of research on dividend payers because I plan on I'm raising a lot of capital right now. So I'm looking for a high dividend REITs, master limited partnerships, and option right uh, uh, ETFs that are high paying dividend. I'm talking about between 12 and 17% dividend payers. And as they get beaten up with the rest of the market, begin buying them up. Is this the one that has the VIX component? I did some research on it. I just don't remember it off the top of my head, but I have been looking at it quite a bit because it has rallied these past couple of days, but it's down still dramatically. Weekly chart. I think it's time to start looking at this because it is yielding it is yielding 18%. That's sexy stuff. So I may be buying this as soon as tomorrow. More to come. I'll put an alert in the members area. Agreed. I mean, what are they doing? What are they doing? Praying? If you know that you are one villain, a real villain, if you have to stop people from praying. So we support them. It's crazy. Okay. Let's get to the weekly charts and see how we're poised to close out the week. Now, the first one I'm going to start off with, folks, is I need a haircut. I'm looking at my hair. I just showered. I can't put enough gel in. The yield curve. I mean, I spoke about this last night with members on Market Wrap, and I said, listen, we're on the other side of this. This is over. The downtrend is now in the rearview mirror. We are now in a new uptrend, a steepening in the yield curve, and we are on the precipice of no longer being inverted on the yield curve. And I'm sorry, folks, that may sound like it's a good thing. Unfortunately, that's when stocks get ripped up. So here, case in point, let's bring it up. 30-year view. Steepening yield curve. S&P 500 overlaid in gray, gold in gold. We are steepening. Undeniable. And the S&P 500 is beginning to roll over. In fact, it already has rolled over. Now it appears as though we are putting in a classic double top. I'm talking about a massive double top here on the S&P 500. And you take a look back here, you had a similar double top back in 2000, and you saw that steepening of the yield curve. That led to a 2-year bear market. And if you want to put this in even broader context, you take a look at this relative to the QQQE. This, what did I do? Oh, I know what I did wrong. There we go. The QQQE is even behaving worse than the S&P 500. The QQQE is an equal weighted version of the triple Qs, which we are short, and we got paid today. The equal weight gives you a better picture for how the health of that index really is. It's not doing well. Only 7 stocks holding it up, and one of them dropped like a rock today. Netflix has been weak of late, so yeah, did it help it out? Yeah, but it's not the player that it used to be. Uh, Tesla still is. Nvidia is. Microsoft is. Those names start to go. Apple is. If those names start to go, look out below. And Microsoft, you take a look at Microsoft shares today, and it was not pretty. And in the after hours, they're down even more. We closed up on the day, but being up is not akin to being good. All up days and all down days are not made equal. So we broke out a few days ago. This to me is a rounding top on Microsoft. Now remember, I think it's next week they report earnings. If we break, God damn it. If we break support, the triple Qs go. And they go in a very dramatic fashion. Apple, the other stock that must hold up, and it's been weak. I didn't look at it today, though. Broke support today. So you're beginning to see signs of the triple Qs, the 7 horsemen of that ETF. They're beginning to break down. I think the only one that's really not breaking down, but it's not a huge component of the triple Qs, is Google. But now that it is starting to weaken up here a little bit. So buckle up, folks. I mean, you take a look at let's go through some of these charts. 10-year yield, 16-year highs today. TLT, hammered. I tried to sell puts here. They wouldn't pay me, even though the implied volatility is very, very high. They still wouldn't pay me enough premium. Now, granted, I want to get far away from the strike. 68th percentile on IV ranking. Those options should be thick, fat, and juicy, but they're not. They're not. So we'll try again tomorrow. Tips. These are breaking down. Now, the reason here is that I showed you earlier that the markets are expecting no rate hike in November and in December. What will that allow inflation to do? It allows it to go up. You saw the dollar today. The dollar at current, one trading day left to go. The dollar at current is down below weekly support. One trading day left to go. Daily view. Not a good day here for the dollar. Could it shrug it off? Sure, but not a good day. Possible lower high. Watch 105 spot 29. If we break that support level, you got to be buying gold stocks. You need to be buying gold and silver. That's our line in the sand on the dollar. Euro, not looking too good, not looking too bad. Not much to talk about. Yen, still a basket case. VIX. VIX is back. It's back with a vengeance. We are at current at the highs of the week. Daily view. We close at the highs of the day. They were buying this into the close. That's not what you want to see. Intraday view, 30-minute view. Look at that. Now, my guess is that they're going to spike the market tomorrow. They're going to try to get something going. You have seasonality that's coming up in November. They're going to try to get this market going somehow, some way. And the thing to remember here, folks, is that bottoms are never, ever put in with bright green futures. Never, ever. It doesn't happen that way. You need a capitulation sell-off, and then you need a rally back to close green, then you have your bottom. If they spike the futures up tomorrow, that is not the bottom. That's just an opportunity to watch, to look, to open up new shorts or add to shorts, which is exactly what I'm going to be doing. The Dow transports, horrible, down over 1.75% on the session. On the month, we're down over 3.5%. Double top. Looks like we're going lower here. Dow Jones Industrial Average weekly view, bearish key reversal. This is a dead cat bounce. Expect a break. This is setting up as a short. That's a bear flag setup, if ever I saw one. Also, expect to see this. Momentum, as measured by the Stokes, to roll over. S&P 500. At current, one trading day left to go. Support is broken. Bearish key reversal bar. And as a reminder, I'm using the terminology outside reversal bar, bullish engulfing, bearish key reversal. If you're not familiar with that terminology, 5-part video tutorial, link below. Top 5 favorite candlestick patterns, free. Moving on. Qs, of which we are short, weekly view. I think we're breaking lower here. Next stop, let's talk about 350, and then we'll look to cover our short for a counter trend rally higher. And then we reload. Daily view. We are leaning into the lower band of support, which technically we broke. So I didn't lean into the short side today due to that. But on any rally, I'll be looking to add more puts. And we have puts on the Qs, and we also have the SQQQ, which is a leveraged ETF putting you short of the Qs. The banks, I warned about this on Market Wrap the other night. I think it was Tuesday night. Excuse me, folks. I'm sorry. I warned that this was a dead cat bounce, and that I expected it to break, and it broke. So a lot of these banks are in big trouble. MS, I know, was down yesterday, down again today. GS, down. Wow. JPM, not looking good. All right. Technology, bearish key reversal bar on the week. On volume, bearish. Semis, breaking support. This is a ascending wedge or a bear flag setup. Call it cupcakes. It doesn't matter. All it is bearish. We are breaking support. So I'm going to pause here just in case anyone that's on here decides to cut out. Folks, these charts are not looking good. They're looking awful. The VIX is bullish. Equities are bearish. So it's time to take a pause. And maybe you had a bad day, a bad week, a bad 2 weeks. That's okay. It's probably going to get a lot worse. So what we want to do at this point in time is say, okay, am I on margin? And the equities or whatever I'm invested in on margin, are they working or are they not working? They're probably not working. The worst thing you could do is double down or add more to that losing trade, especially on margin. The wisest thing to do is to look yourself in the mirror, even if you're down on your trades, and say, You're wrong. It's okay to be wrong. What's not okay is to let that loss run and to have your brokerage call you up and say, listen, either you deposit more money or we sell whatever we want indiscriminately. What do you want to do? That is the reality of where we're going now. With each down day, although margin debt is not as high as it has been in recent years, which is a good thing, but the margin calls will be going out and they will sell whatever they can sell indiscriminately. So the key, and I've said this before in the past, and I'll continue to say it in the future, you can't piss in the tall straw with the big dogs without your capital reserves. Gordon Gekko, Wall Street 1987, my favorite line of the movie. You got to have your capital reserves. You need to be liquid. You don't need to be short. You need to be sitting with two things. One, a watch list, like I'm building out with those high dividend stocks. Two, capital. Lots and lots of cash. And get ready to put it to work. When there's blood in the streets, start nibbling. There is no blood in the streets yet. This is nothing. This is nothing compared to what we're probably going to see. Nothing. So is it wise right now to go all in on this pullback? No way. This is nothing. Might we get a seasonality rally? Sure. We could quite possibly get that. But January is probably going to be not a good month. Let's move on. How much time do we have left here? We have about 17 minutes. Is that a high dividend paying fund, PCN? LABU, which we own. I'm not adding any more to this, but I know that it's setting up for a squeeze on a monthly time frame. Yeah, we're setting up for a nice squeeze here. They're probably going to do a reverse split on LABU, but I plan on adding more here in the coming days. Not that we own a whole bunch of it. Consumer staples. 2 back-to-back up weeks. This is not going to hold. It's not going to hold. It's going to roll over. Avoid. Daily chart. Look at this. It's already going. And we own PepsiCo. Actually, no, we don't own it. We have a strangle on. I may go short of PepsiCo and create a covered put on that trade. Or I'll buy puts and it will be a covered put. Aha. So we'll be watching for a breakout or a breakdown on PepsiCo and trading accordingly. Consumer discretionaries breaking down, bad. So much for the retail sales number. Emerging markets getting ready to break down. Even with the US dollar weakening, if equities weaken, everything weakens. Avoid emerging markets right now. Energy. It's a standout, that's for sure. Oil prices moving up higher. Sorry about that. That's one of my alerts. Gasoline prices broke out this week. No bueno. Boyle. We had a great week last week. This week is not a good week. Well, the past 2 weeks, not a good week. Coming under pressure. Gold. Uh, a beautiful week. Up 2%. Volume dropped off today, which is surprising. Actually, I'm sorry. This is a weekly chart. One trading day left to go. Daily chart. Wow, what a move. What a move. All right. Monthly chart of gold. This is extremely bullish. Extremely bullish. So I'm probably going to be buying calls on gold on a reversal bar like this, and we're probably going to be going out at least a year on those calls. And I already own the physical. GDXJ gold miners, gonna have to start buying these up. Nugget behaving well. I'm just worried about a sell-off in the equity markets, resulting in a sell-off in these names, which is why I've been kind of deliberate, not getting aggressive with buying them along with gold. Silver, a breakout week. What else do we have up here? Tesla, we went over. The chart of Tesla, I warned about this chart on Sunday night. Weekly chart. I warned that we had broken down the week of the 18th and that we would rally back and that we were rallying back. And I expected that we would break down. That's what we did. Go back to Sunday Night Futures Live, go over our Tesla analysis. It's exactly what I said. Here we are. Now, I would have loved to have been short. I couldn't because of earnings. Now, different story. I can't press a short here. It's a little bit beaten up. Any counter trend rally, Tesla becomes a short. Microsoft in danger of rolling over. Netflix, awesome price action here. I tried to sell calls today. Not enough premium. They killed the implied volatility this morning after earnings. So it would tie up a lot of capital. And I still think that this could go up higher. So on a continuation move up higher, I'm going to look to sell premium. The price action here today was very, very good. It held gains. Very, very strong day. And it may move up higher. Meta. On our small account, we have this trade. We're about flat on it now. I'm probably going to have to close this out because we have earnings next week. We're not going to carry this position into earnings. I'm hoping for a rally tomorrow so we get some time decay, but the options are extremely expensive to buy back. So as they get closer to earnings, they're going to get more expensive. So I might as well do it this week. So I'm probably going to be closing out that trade and reestablishing a new trade in some other equity, commodity, whatever. Doesn't matter to us. Amazon, how's that doing? Not doing much. Rivian, not doing much. That's not Rivian. What was this? OpenAI. Platinum firming up. Riot. These are just some random charts that came up. All right. Let's do some chart requests and we'll call it a night. All right. Last time I looked at uranium stocks, they were looking really, really good. Really good. URA was looking really good. Uranium ETF. Let me just go take a look at URA really quick. Yeah, so we were in a strong uptrend. It's taken a break here, but I think that they're reloading. Traders are reloading down here, 24.67. And I'm looking at this at the corner of my eye. You're going into a seasonally favorable period of time, up, what is this, 58% in November. October is one of the poorer performing months. That's good. That's an opportunity. But November, December, even January are good months for URA. So I'm sure the correlation between Cameco and URA is fairly tight. This is looking good to me. We have a weekly breakout. Volume is going to be about average. Daily view. Yeah, they want to take this up. This is looking good. I like this chart. CCJ, buy. For Miss Jody, PLTR. No bueno. This to me is a short. Setting up as a short. Ascending wedge formation usually gets resolved to the downside. So I'd be looking to short PLTR on a break. You have a volume shelf here at let's call it $17 per share. This breaks $17 a share. It's going a lot lower. So I would not be a buyer here. I think it breaks lower. Yeah, not looking good. I would avoid this. We go to the members area. I know Tom had one in there. Let me refresh. SEDJ. Okay, yeah. So SEDG for Tom, we were long of this. I sold puts. I sold covered calls. We bought the common stock on a weekly breakout. And it was last week, right? Yeah. Actually, no, this week it broke out. And now we're being rejected. So while I would not go in and buy the common stock because we don't have the setup here, I would be a seller of premium. I would sell puts because the last I looked anyway, the implied volatility on, oh wow, look at this, on SEDG is now 100%. Now they have earnings coming up on, I believe, on 11/6. Fact check me on that. I believe I'm accurate. I would not hold this position with a common one standard deviation strangle in that environment. I may trade it on earnings, but it would have to be a butterfly just in case they have some real catastrophic or gangbuster report, so I'm protected. So SEDG, I like still even before earnings, but I'd like to be out of that trade before earnings. What else do we want to go over here? Dish for Mike. It's trying to break out. This is a weekly chart. Hey, Mark. I'm looking over here, seasonality. This month is a 50-50 month, but it gets a lot better next month. So you may be setting up for a trade here. It's trying to break out. You can't buy this stock until we close above, let's call it $5.50. Right now, it's struggling. So I would be very, very careful here. I would wait for strength at around 550 on the close, not intraday, on the close, and look to get long then. Otherwise, I would avoid this. Trader Isaac, weekly accumulation on PLTR though. IBD growth crowd loves it on this pullback. Just my 2 cents. I have it on watch, Jody. If it holds above 21-day moving average. Oh, where is it now on relative to the 21-day? It's below it right now. That's the not sorry, that's the 9-day. I always have to check myself. I have different colored lines on different charts. So here's a 21-day down here at around 16.6. I don't like the chart. Maybe it is consolidating, getting ready to break out. I'll revisit a bull scenario if we break out. Right now, this weekly chart is kind of eerie. So I would be very careful here about being long. All right, folks. If there's nothing else, I'm going to say everybody have an awesome night. And thanks for being here. Like, subscribe, hit that notification bell. Don't forget about 5-part video tutorial, my top 5 favorite candlestick patterns. Link below. Talk to you soon. Have a profitable trading day tomorrow. Be well.